Hello everyone, welcome back. This is Tristan here from 𝗨𝗣𝗗𝗏𝗧, and in this video we will be going over Ethereum, and we'll run through some SMC-based analysis from the monthly down to the 4-hourly time frame, and yeah, we'll try to find drawn liquidity for the upcoming month and weeks and days, so on and so forth from there. Like usual, we'll mark out the lows that we have from June 2022 and high from November 21. So that's on the monthly time frame. That's a larger swing. So, and we can mark out the internal swing as well. So that will be the intermediate term swing for Ethereum. That was from April 2022, and we already know that for the last 8 months we've had like an up move. So we have been testing the highs. So for the month of July and August, we do have some bearish move after 2 or 3 indecisive months after the sweep of the highs in August from last year. We have been pulling back. So basically, after the sweep of the highs, buy-side liquidity being swept, now basically what price did here was take the external liquidity, and for the rest of the months, now it's coming back down into what? Internal swing range. So internal swing range can be formed either from here or here. So we can also mark out an immediate term low on the monthly. That will be this one. So for now, we will consider this as our monthly low that we're working with, and then we'll use this high that was formed in April as our monthly high. So just to set the narrative straight, so these are two potential zones for the monthly on the upside, and these are two for the downside, the sell side, right? And now we are in this, so our immediate range will be between this and that. So that's the monthly high and monthly low that we are working with. And just to build more confluence, we can just have a 50% marked out here. So that will be at 15.13. So we'll just mark out here, and we'll just change this to 13. Perfect. And we can remove the Fibonacci. So this, we already know that this will be our midpoint, so we can just also monthly mid. So we did have a tap that was previous week, and then we have a snapback up, and during that tap, what did we do? On the monthly time frame, we have a sweep of the lows. So we'll just zoom into this price action just around here. There we go. So we do have narrative straight, monthly high, midpoint, monthly low, and price is down at the 50% basically, and we have pushing up. So potentially on the monthly time frame, if this low holds, this high will be targeted, and this is forming what relatively equal highs. But at the same time, this is also a minor sweep, a very, very minor sweep, but still a sweep. So we have to keep that in mind. So the highs are being swept, the lows are being swept to depth, and looking on the monthly 50% of the wick, we do not have a mitigation of the 50% of the wick. So we can always assume that price may come down into this fair value gap, mitigate further, and push into the upside, then come down. So we can mark out this as a monthly fair value gap that can become an inversion fair value gap for further upside. But for the monthly time frame, this is what we have as our potential levels that we are looking at, and nothing more to it on the monthly. We have a day and 2 hours remaining for the monthly time frame candle to finish printing. So we either may expect the candle body to finish around here, or if we, for some reason, if we see some sort of bullish price action, we can just see some body closure on the upside. But to be quite honest, we can just work with what we have. So we'll just mark out the 50% of this swing point of this rejection block in the wick of the monthly, and that can become our potential draw to the upside, and then we can expect price to come down into this fair value gap to the downside. So we'll just mark out this on the monthly. Maybe I'll just change this to a different time. Maybe something like this. Yeah, that's a bit easier. Okay, so dropping down to the weekly time frame, what do we see? Okay, let's fix the levels. here. This was the sweep basically on the monthly, and that's the monthly high. Monthly fair value gap that we are expecting to be swept, and yeah, on the weekly, this is what we have as a monthly range. Also looking at our overall analysis for the week, what do we see? We have a bearish push down, then we have a snapback up into the range, and we do not have what body closure. So at this point, below this liquidity sweep, we do not have a body closure, and at the same time, we do have a mitigation or an in-depth mitigation of this fair value of this order block that was, so basically this was a raid for these previous lows into this fair value gap, and that gave us a push up. So what I was trying to say is this. So this was the push, fair value gap was mitigated in this week, and then it gave us a nice push to the upside starting in March all the way until like mid-April, I believe. Yes, that's mid-April. And then we start to see a pullback into the range again. So if we draw our Fibonacci from the low to the high, and if we just mark out our zones, 79% of the swing was mitigated, and now we're pushing up. So we would, if we want to see some bearish price action, and if you would like to short, so this area will be a good short. If not, then this is on the weekly time frame. There is a fair value gap that we have mitigation, but we do not have a full fill of that. So that area can be of interest, and if not, then this breaker block can become another area that we can look for shorts to the downside. And like that, we'll just remove this. So on the weekly time frame, what do we have? We have a sweep of the highs, internal range liquidity being generated, sweep of the lows, snap back up into the range. The lows are basically holding, we can say, because there is no closure of body. If we have an impulse body closure to the downside, something like this to the downside, then it's a different story. But at this point, we do not have a closure, so we may expect something like this into the supply zone mitigation, and then we can look for further downside. And also we can note that in the month of this current month, mid-month, we had a tap of the mid-range. So that's why we have such a strong reaction, because overall the range is bullish because we are forming higher lows. So the narrative is that on the weekly time frame, we are on a larger time frame, we are in a bearish trend, but what are we doing? We are doing break, lows were taken out, now we are forming higher lows to mitigate for further downside. So always keep the higher time frame narrative in mind when you are working with lower time frames. So the weekly time frame, we can see draw to the upside and then further to the downside, or if we start rejecting, we can start rejecting the downside. Also, for an early confirmation, we do not have this low as a confirmed low at this point, but we can just for just confidence sake, we can mark out the 50% like so, and we can mark it like that. And we do see a rejection at the 50%, so price is still holding. We do not have a bearish candle, so we may see some more push to the upside, and we can also mark out this as like that, so that will be our inefficiency, and we can refine it to the wick high. So that works in confluence with the 50% zone on the weekly. So this is what we have, and this, yeah, just put it like that. Perfect. So that's what we have on Ethereum on the weekly time frame. Dropping down into the daily time frame. Let's see. So daily time frame, everything is similar. We do not have a candle body closure. We had an impulse price action, impulse up around here for about 4% move. We had a larger move on Bitcoin because, of course, everything just moved because of that. And we do have some good price action to the upside. So now what do we have as on narrative basis, right? So we can see this is our stop rate. So we can just mark out as a stop rate. Stop rate. here, and we have a bearish rejection, and now basically this is the same thing, stop rate to the downside, but of course we did an impulsive stop rate here, so a lot of liquidations happened because this was an overall high probability zone that was to be mitigated. We had several fair value gap. This was the extreme that was not mitigated, but this fair value gap was mitigated to the downside, and here, and this was completely filled too. So keeping an overall bias in mind on the daily time frame, what do we have? We have a rejection at the 50%, and we are forming what? Higher lows. Internal structure higher lows on this low time frame, but on the daily time frame, we have a candle body closure to the above this and forming what? A fair value gap on the daily time frame. So that gives us a narrative that even if we start to consolidate for a couple more days, come down here, sweep the lows, similar sort of narrative even for Bitcoin, and then we give ourselves a nice displacement to the upside, we can easily look for targets to these highs. If not, we can just see rejection from here to a further downside. And the reason why I say we may see upside move is because we have a deep mitigation of the overall higher time frame swing. We do have inducement around here. We do have like higher lows being formed just right around the fair value gap. So that is also an inducement range, and liquidity is being formed under those lows. But nonetheless, we do have on the daily time frame a strong breaker structure, a fractal break and a strong breaker structure to the upside, just right around here. That gives us a narrative that, okay, yeah, if price is bullish at this point in time, it needs to form higher lows, break structure, displacement, and then you can see something like this to the upside. So on the daily time frame, you would definitely want to see lows being held, and also you do want to see some sweep of the sell side liquidity, but sweep in a sense where it's still respecting the structure but taking the liquidity. So there's nothing pending, and then which will give you efficient high quality moves to the upside. So I do still believe that there is still quite a lot of room for the price to move to the upside, and this is also what we can name that as LR. So that's low resistance liquidity run, and price can easily mitigate and go into the higher time frame rejection block, which is a rejection block on weekly and the monthly time frame, I'm pretty sure, and this becomes a bearish order block on the daily time frame. So this is what I have on the daily. Dropping down into the 4-hour time frame, we will just focus into what this price action here around here. I'll just fix these lows. I'm not sure why TradingView does this. All the drawings go all over the place, but so this was the daily fair value gap. So there we go. We do have this inefficiency. That's a 50%. Price is rejecting. Price is not closing above, so we do see some flip around here. So this is what sell to buy to sell range. Sorry. So this was our buy to sell range because price was pushing down aggressively and didn't stop. Just right around here, it just melted. So this didn't have any efficient delivery. So here selling was happening, here buying happened. So this was expected because a lot of sell orders were pending from here. So this can happen here, but now we do have an impulse up, which also indicates that this accumulation led to what? Accumulation of longs. So price will come back down into the range, even drop further low into this lows, and then we may see some more accumulation and push to the upside because these highs, this fair value gap consists of a lot of buy orders, which gave us this impulsive move. So be careful when you want to long. So I would say that even on the lower time frame, you'll want to consider this as the low because this low took out this internal swing lows. So you take this low and you take this current high, which is not confirmed yet. We are still in the premium of the zone, so 50%, about the 50%. So if you want to look for scalp entries or intraday entries, we can look for some scalps into the downside, looking into the discount zone of the fair value gap, and also we can see that this is the order block that generated that liquidity, and this basically, I would say this is the order block that took the lows and the high was taken, then we came back down into the range. So this will be our bullish order block. Price broke above, came back down into the range, and then it impulsed away from there. So origin move, propulsion block around here. So that's the propulsion block. And looking at this to the upside, that works into confluence. So long entries down from here will be of high confluence around here to the upside. And yeah, we can target these highs. These are forming relative equal highs, almost relative equal highs. And then if you want to short into here, then long up into this area, that will be a potentially good trade. But again, work with the price action that you have on hand rather than speculating in the sense where you are FOMOing and jumping the gun and risking too much unnecessarily. So always manage your risk properly, and yeah, hope you guys found this insightful, and yeah, I'll speak to you guys next time. Until then, take care.